Okay, why don't we get on our way? Hi, my name is Stephen Blank. I am the editor and publisher of Blank Slate Media, and I would like to welcome everyone to a very timely discussion on PPP 2, Payroll Protection Plan Program 2. My guest today is Neil Seiden, the president of Asset Enforcement Solutions, a financial advisory firm that provides investment banking and consulting services, and in 2020 began assisting businesses with payroll protection program applications. In the process, Neil and his firm helped obtain more than 800 businesses very much needed loans. And it should be noted that the SBA and not the borrower pay for Neil's services. So I'm going to, Neil, why don't we start with eligibility? Maybe give us an overview of PPP, what it offers, and who is eligible.
Okay. Can you give me control, Stephen?
Yeah, you're now the host.
Okay. Just give me 1 second to get this. Okay, so you can see my screen now?
Yes, we can.
Okay. So I'm going to answer those questions, Stephen, in the context of this presentation, which is just been updated for purposes of this this webinar today. So it has all the latest and the greatest. So just to give you, just so you know who we are, as Stephen mentioned, we're a financial advisory firm. We've been around for almost 18 years. Our primary function is to raise capital, debt and equity financing for companies that have both favorable as well as unfavorable challenges. Typically, we never work on anything that's easy. Usually it's complex in either a good way or a bad way. As Stephen mentioned, we did over 800 loans for over $100 million. We help people in 34 states. That amounted to saving approximately 10,000 jobs. Loan size ranges from $600 to $7.1 million. We take pride in really helping everybody, no matter what size of their loan. We're kind of different than most financial advisors in that we are an agent for several lenders, 4 or 5 lenders. And we're able to, as lenders may or may not have any issues or slow down, we are able to move our clients from lender to lender, depending upon different situations. There's no fee for our services. We're paid actually by the banks, who are paid by the SBA. We were able to get people approved when others weren't. And we do that in many different ways. This is just a picture of, so we actually created a team just to help people with PPP loans. And this is a picture of our current team, which this year is bilingual in that we can assist people in Chinese, Spanish, as well as Vietnamese. Now, in terms of, you asked who's eligible. So everybody on this list is eligible. And I highlighted in blue folks that sometimes did not realize in the first round that they were eligible. So people use the word independent contractor, And that's not like a contractor that works on your house. An independent contractor is somebody that has their own business. They could be anywhere from a financial professional to a writer to an artist to a salesperson. They don't get a W-2 from an employer. They will typically get 1099s. So all 1099 recipients are eligible for a PPP loan, as well as single member LLCs and sole proprietors. You do not need to have employees in this category to be eligible for a PPP loan. Let me repeat that. You do not have to have employees to get a PPP loan. And then the list is the list going on is just the other types of different entities that are eligible, and including usually with SBA loans, nonprofits and faith-based organizations typically are not eligible for the typical SBA products, but the SBA made an exception with respect to these PPP loans due to COVID.
So Neil, let me ask you a question. If
Sure.
I have somebody who's a friend and had been doing events, fairs, senior fairs and kids fairs, and she was running the business. Obviously, she's impacted by COVID in terms of the shutdown. Is she eligible?
And she is waiting to reopen her business.
Correct.
And did she have the venue, or she would rent out different venues?
She would rent out venues.
Okay. Yes, she is eligible. There's also this other program for shuttered venues, which maybe she's eligible for. That's a different program, also a forgivable program. And in that program, you apply directly to the SBA, and you can't get money through that as well as the PPP loan, but she should look to see if she might be eligible, for that. Typically that might be, you may have to have a venue as opposed to renting one, but you never know without investigating. And, they should see which might maximize their whatever loan.
Okay.
Forgivable loan. So we put together a little diagram just to show how this program works. And on the upper left-hand corner is the cost components that will go into creating and calculating a loan, which are salaried employees, healthcare costs, as well as retirement costs. That's what creates the PPP loan. Used correctly on forgivable expenses such as interest, mortgage, PPE, etc., the loan could be forgiven by Uncle Sam and turned into a grant. Now, back in 2020, from April to August, there was one PPP program. Now, in 2021, it's split into those that never got the first PPP loan, as well as people who are now applying for their second loan, and that's referred to as the second draw. So we put a little chart together. Stephen, you haven't seen this before, and this is kind of a little flow chart explaining, where you may stand. So let's look at the, let's look at the top. Did you get a first draw PPP loan? If the answer is no, then you could apply for if you're eligible for a first draw. If you have less than 500 employees, you could be eligible for up to $10 million. If you have more than 500 employees, if you meet the SBA alternative size standard test, you might be eligible for up to 10 million. If you fail that test, which is meaning if you have more than 15 million in net worth and your net income for the last 2 years was over 5 million, you are not qualified for a first draw loan. If you didn't get a first loan, if you did get a first draw loan, you could be eligible for a second draw. Now, the first requirement is if you have more than 300 employees, you do not qualify. If you have less than 300 employees, that's the first test. The second test is, did your revenue decline 25% or more quarter over quarter compared to 2020 versus a quarter in 2019? If the answer is yes, you could qualify for up to $2 million. If you did not decline and your revenue increased or only declined 10 or 15%, you would not qualify for a second draw loan. So those are the main two things, revenue reduction and 300 employees or less for a second draw. So if we want to compare the first draw, which is in the middle column, to the attributes of the second draw, which are on the right side, you see that in the first draw, you only had to be in operation on February 15th, 2020 and have payroll or be an independent contractor to be eligible. Now, the SBA is trying to earmark the money for companies that really suffered. So, which is where you get the 25% rule. They want to keep it to smaller businesses where you get the 300 employees. And they've also reduced the loan amount from 10 million to 2 million on a per company basis, or up to 4 million for a single corporate group. So those are the major changes. What they've also done, since the restaurant industry has been so hard hit, they've increased the multiple in which the loan is based on for restaurants and anybody in the hospitality industry, where the NAICS code starting with a 72 to 3.5 times instead of the normal 2.5 times for every other type of business. And those are really the major changes. They've increased the types of expenses that could be used for forgiveness, and we'll get into that in a little while. But otherwise, the program is basically the same. They've also increased the eligibility to additional types of entities. I know somebody asked a question about co-ops. Housing co-ops are eligible this time around. They were not the first time. So since a co-op was not eligible the first time, they would be eligible for a first draw loan. And they'd have to meet the requirements and tests that a first draw candidate would have to meet. In terms of the, let's see, okay, looking at comparing the first draw now in the right column versus the original, you see that the amounts are basically the same. The max was 10 million in the first round. It stays the same at 10 million. What the SBA tried to do, in the interest of being fair to everybody, they basically made the first draw loan have the same attributes now as it did in April, but they've now opened it up to a wider audience and are making additional expenses forgivable, so that most of the loans will turn, if not all of them, into a grant.
What if I have, somebody is asking if you have a side gig plus a W-2 employee, if you are involved in two businesses?
So I would assume that person would probably have been a Schedule C. So if they claim that other side gig on their tax return and prepare a Schedule C, they would be eligible for that, for a PPP loan based upon the Schedule C. And we're going to get into Schedule C income and eligibility in a few minutes. But the answer would be yes. And if they had multiple companies, filed multiple Schedule Cs, or had many different corporations, they would also be eligible up to certain affiliation rules. But let's take a look to see how the loan is calculated for most types of entities. Now, many people made a mistake in the first round when they applied, and they only used the compensation figure as the cost component to calculate their loan. So the program is called the Paycheck Protection Program. So everybody thinks it relates to just payroll. Well, included in the components, as I mentioned earlier, it's compensation plus employer paid healthcare costs, which is in red here, plus employer paid retirement costs, plus a small amount of taxes, which is the state unemployment insurance taxes. So just looking at the calculation, we're using, I made up a number here. It's an average monthly compensation number. And what has to be deducted is the excess over 100,000 of individual compensation. So in an effort to kind of conserve money and be fair, the compensation portion of the loan is capped at 100,000 per employee. Now, different lenders, Stephen, it's unbelievable. We're working with 4 different lenders. Right now, 3 of them have different methods in their application of calculating the loan amount. One of them requires that you enter in the amount, the monthly average of the healthcare, retirement, and the tax and the compensation portion. The other asks you to combine them and just enter what the amount we have here in green, it's highlighted, which is the total average monthly payroll for 250,096 into the application. And then it would determine the amount based upon that. So every lender has their own way of doing this. But what happens is you take that monthly average, multiply it by 2.5, and that determines the loan amount.
Now, Neil, there's one question here. People do have the right, am I correct, in using the payroll from either 2019 or 2020. And most cases, people's payroll was probably higher in 2019, pre-COVID. So I'm allowed to use those figures in calculating my loan request.
That is correct.
Okay, so, and I have a choice between if I want to use 2019 or 2020, it's up to the applicant.
Correct. The SBA has made it clear in its guidelines that you could use either information. People should have at this point the 940s and all the information they need in order to apply. And they basically want people to maximize the loan amount, maximize their forgiveness. So they're encouraging people to determine which payroll will yield them the higher loan amount. The only caveat is whichever year you use for the other cost components, they have to be from the same year. So you can't have the salaries from 2019 and the healthcare and retirement from 2020 if that is higher. You need to use everything from the same year.
Now, Neil, there's a question. If I'm an independent contractor, so that's a payroll that you're talking about, a business. What if I'm an independent contractor? What can I apply for? What's the basis of applying as an independent contractor?
Okay, so we're going to do a whole section on independent contractors. So let's hold, if we can hold off on that question.
Okay.
Okay. Because I got about 3 different scenarios for independent contractors. The source documents, and the purpose of this webinar is to explain some of the changes, and we kind of dig deep into the documentation requirements, which is where everybody really has the problems. So in terms of the information that they're going to use for payroll, the payroll cost, the compensation, independent contractors, and I'm partially answering that question, will get that information on their Schedule C, as do sole proprietors and 1099 recipients. An LLC, it could either be a Schedule C or 940 or K1, depending upon how they file. And then most people, it's the 940, which is where the W-2 information gets summarized on an annual basis. And for partnerships and some sub-S's, it could be K1s. So, and on our website is a summary for either the first draw or the second draw. It's the SBA guidelines where they discuss for each entity type exactly the each item that goes into the cost calculation. So that's available on our website if anybody wants to see it. Now, as I mentioned before, in terms of compensation, it's capped at $100,000. So you either need to net that out on an application if they're asking you for just one number for the average monthly payroll. In other cases, they're actually asking you to take out, for what that amount is. And this is a sample of a worksheet that we prepared to come up with that number. Okay, so remember, you have to exclude any compensation in excess of 100,000. One of the other components you need to get is the SUI taxes, which are the state and local taxes on compensation. This dollar figure can be obtained from the state quarterly wage and reporting forms. So it's not the federal quarterly form, but it's the state form. So included with your 941s, which are the quarterly reports, would also be New York State or another state's reports, which would give you the unemployment figures. And usually just so you know you have the right figure, it's not, first of all, it's not the federal or the state withholding taxes. It's the unemployment insurance, the state unemployment insurance taxes that you want to pick up. Usually they're higher, the highest in the first quarter, second quarter, it's the second highest amount, and then it decreases because that amount is determined on a fixed dollar amount. So as people's salaries go beyond that amount, that number decreases. So if you see a number increasing, you either have the wrong amount or it means that you maybe hired a lot of people during the year. Okay, so now what we're going to discuss is where do we find the documentation to substantiate the employer-paid healthcare and retirement benefits. Now, each lender uses different mechanisms and is asking for different documentation. One of our lenders is requiring a copy of the 2019, they're suggesting your 2019 tax return. So here for a C Corp, it would be Form 1120, and on line 23, and would be the retirement benefits paid, and on line 24 would be the healthcare and the vision, and all the healthcare costs would be on line 24. And those were the amounts that they would take in order to calculate the PPP loan, and that would be the documentation that you would need to provide. Other lenders are requiring actual invoices from the different insurance companies. If you're an S corporation, you'd file Form 1120S for either 2019 or 2020, and you would use line 17 and line 18 for both for either retirement employee benefits. You may have just employee benefits and not pay retirement benefits, so you would just use the expense on line 18. Partnerships file Form 1065, and their lines would be 18 for retirement benefits and line 19 for employee benefits. Now, just as long as we're discussing partnerships, I just want to point out with respect to the compensation and using compensation amounts on partnerships, K1s would represent the compensation for purposes of the ownership of the partnership, and for the balance of the employees, those compensation figures would be picked up on the 940 for the organization. For nonprofits, and it doesn't matter if you file Form 990 or not, but if you do file 990, it would be on Part 9. There's line 8, which is the retirement benefits, and employee benefits are on line 9. And this is in lieu, you would use these lines from these respective tax returns in lieu of providing the lender with all the insurance invoices that you paid. And I think, Stephen, that's the way you applied with all that documentation. And then the lenders then came, subsequent to that, when the literature came out, some of the lenders, limited to this to streamline the process. so an alternative method of documenting employer paid benefits is, as I mentioned earlier, you'd want to summarize by month, by type of healthcare plan that you're providing, the dollar amounts of each of the plans, and you'd want to attach all of the invoices you receive from each insurance company. Now, just so everybody knows, what is included in the healthcare costs, the employer paid benefits? It includes healthcare, group life. Group life is new this round, as well as disability, vision, and dental insurance. So you would have you'd either basically on the tax return, all those amounts should be added up in the healthcare benefits line of the tax returns. If not, you may want to modify how you present the information to the lender. But if you're going to present documentation, detailed documentation, I urge you, do not just scan it in and upload it, individual invoices, because no one's going to add it up. You need to add it up yourself and summarize it to give them an audit trail, because you want to make it as easy as possible for the lender.
Neil, can you just discuss that just for a moment? Is what role can you quantify, or do you know for a fact that putting it in a very specific format that makes it easier for the lender will increase your chances of getting the loan?
I could tell you that we know this round, lenders are kicking back applications that they don't understand. They'll convert it from a lot of them are now using robots or IA to check these applications. So I don't know that artificial intelligence, or I'm sorry, AI is going to add up all the forms that someone might upload. But I could just tell you from being a CPA for over 30 years, I could tell you that when people present things in a certain presentation is very important. So if it takes a few minutes to summarize things, it will speed up the process immensely and eliminate any questions or errors that might be made on the lender's side.
Now, Neil, we have a question can I select a different lender than I did for the previous PPP?
Yes, you do not have to use the same lender you went to the first time.
Now, are they going to is basically what they're going to accept, that's driven by the SBA and not the lender? Is that correct? The lenders are basically following what the SBA is asking for?
The SBA created guidelines. The lenders, each lender has interpreted it a different way. So we have one lender that would be requiring this summary sheet along with all the backup information for every line item on this summary here for Oxford or the dental. We have another lender that is only requiring the tax returns and is looking at the amount that is on the tax return for the retirement and the healthcare costs. We have another lender that is not even asking for documentation on the retirement and the healthcare costs. And even though it's on the SBA guidelines, and I actually sent them an email the other day suggesting that they modify their application, because I was just reading earlier today, the SBA was complaining that certain lenders have not really followed their guidance and are not providing the documentation for the healthcare, and they're actually going to kick some of those applications back and maybe have people restart those applications.
Yikes. Also, there was a rule last time around, for one, that when you filed with a bank, you had to have an account there. Is that true this time around?
First of all, that was only for certain banks, that rule. So those were banks that A, were taking care of their customers, and B, were looking for additional business, and in doing so required people to open accounts. The lenders that we work with, none of them require anybody to open up an account. These lenders are looking to help people, and I think we discussed this. I correlate with the way the government is dispensing the vaccine is having the states disperse them. In this case, in order to help businesses and employees, they have created this Triple P program as a methodology to disperse money to employees, and they're doing it by having the banks spread the money out based upon all this criteria. But there are many lenders that do not require a new bank account.
Okay, and a sub-S corporation is also eligible,
Yes,
follows a similar process. Okay.
yes, as corporations are eligible. So now we're going to talk about independent contractors, sole proprietors, 1099 recipients, and single member LLCs. That's that category I had in blue. And I could tell you that I've met over a dozen, if not more, people in the last 6 months that were eligible for a Triple P loan. One was a residential real estate broker. One was an interior decorator. One was a financial consultant who was a CPA and was a partner of a CPA firm. They did not realize that they were eligible because they did not have employees. So let's talk about independent contractors now. So independent contractors are eligible. They're capped at 100,000 like everybody else. The way you calculate it is using Schedule C from the Form 1040, and the calculation is based upon line 31, which is the profit or loss from a business, capped at 100,000. What you do is you divide that line by 12 because it's a monthly average, and then you multiply by 2.5, just like everybody else, and that will determine the PPP loan. Because it caps out at 100,000, the maximum an independent contractor could get is $20,833. Now, if your line 31 is a loss, which would be a negative number, then unfortunately you're ineligible for a PPP loan. Okay, so unfortunately we've come into contact with people where line 31 is a loss, and sometimes people, it could be a legitimate loss, or maybe they're playing around with their taxes. But if it's negative, it's ineligible if you don't have employees, and we'll get to that in a second. A new thing the SBA is now asking is substantiation of the revenue number that's on line 1 of the 1040, and I'm sorry, of the Schedule C. And the reason they're asking this is because there was a lot of fraud that was committed during the spring and the summer months in the first round of the Triple P program. And a lot of that fraud came from independent contractors because all you needed was a pro forma Schedule C. It did not even have to be filed with the IRS. Your tax return did not have to be filed. So they started asking for bank statements later on towards the end of the program in July. But early on, there was a lot of fraud. So to substantiate it, they're suggesting that you could attach or upload in your application with your Schedule C 1099s that you received. Now, just as I showed the summary before here of summarizing the information to make it easier, if you are a consultant and you have or an independent contractor and have 1099s from multiple different businesses or clients or customers, we suggest that you prepare a similar summary here, itemize each 1099, add it up, and get close to that revenue number that you see on your Schedule C. Again, don't leave it for the computers and the robots to add up your 1099s. The other documentation they're suggesting is bank statements, where you show deposits from your customers or clients. You could use your accounting records. It could be QuickBooks or another system. It could be invoices or sales journals. Anything that will substantiate that 125,000 that's on line 1. Okay, so this is the simplest form of a sole proprietor independent contractor. This is where we have an independent contractor that files Schedule C and they have no employees. Any questions, Stephen, on this?
No, I think well, let me see if our,
Because we have two more independent contractor scenarios to discuss.
okay. Why don't we then, somebody had asked in the PP loans and the idle grants, are there grants within the stimulus that are also provided?
Okay, the PPP loan is a loan that could turn into a grant if the money is used correctly. And that was a diagram we showed earlier. It has to be used on forgivable expenses, and we'll discuss that in a few minutes. The idle loan, EIDL, is the economic injury disaster loan. That is a loan that has to be repaid to the SBA. Those loans could be obtained by going to the SBA directly. So you'd want to Google SBA and EIDL. It takes about 15-20 minutes to apply. That interest rate is at 3.75%. You don't have to pay any interest or make a payment for the first 12 months. And that's paid over a 30-year term, similar as to a mortgage. That has to be paid back, though.
Okay. Okay.
Now, the other scenario is a sole proprietor that is profitable, that has employees. So the way you would figure that loan amount is you would, as long as line 31, which we have highlighted here in yellow, is profitable, which is greater than 0, you would take that amount, you combine it with the salaries that you paid. And in this example, we're looking at page 2 of the Schedule C, which is the detail of the cost of goods sold. Because in this example, this is the bakery, and the labor, the money that was paid, or for the bakers, which are part of the cost of goods sold cost. So you could also, alternatively, the salaries could appear in the salary line of the Schedule C, but in this case, since it's direct labor, it's included in the cost of goods sold section. So that's something that people need to remember if they have salaries in more than one place, especially if it's a Schedule C and they want to pick those up. So you would take in this case $130,000 of cost of labor, combine that with the $67,000 on line 31, divide that number by 12, multiply it by 2.5, and that would yield the PPP loan for this sole proprietor that's profitable with employees. Okay. Alternatively, if this same company had a loss, so if you look at line 31, it shows a loss, and I'm sorry if it's hard to read, a loss of $2,400. Well, in this case, what you're going to do is, so in this case, again, line 31, you would be eligible for up to $100,000. Because it's a negative number, the owner would not get a PPP loan related to their compensation. Instead, they would only get it on the compensation that they paid their employees. So in the case of a negative number on line 31, you reset that number in its place, you put a 0, and then you would add the amount paid for direct labor or salaries. You would take that number, divide it by 12, then multiply by 2.5. Okay, so you're not going to add the negative number to the 130,000. Instead, you're going to offset the negative number with a 0, and then add in the salaries, whether it's included on cost of goods sold or on the face of the Schedule C, to calculate the loan number. So really, for independent contractors, there's different scenarios based upon if there's employees and if there's a profit or a loss. So is any other questions on independent contractors. Okay. One of the things that all the lenders will ask for is probably a payroll report for February 15th, 2020. And depending upon, so you just need to provide a report, and it could end after it has to include the period of February 15th. And that's because they want to make sure your company was in business as of February 15th, 2020. And that is an important date with respect to PPP. If you're an independent contractor and you don't have salaries, they're going to ask for a February 2020 bank statement instead. Okay, so I'm just giving everybody a heads up. And we've discussed all the different types of information that you need. So my suggestion, as well as every lender, is before you go down to go to an online application or a different type of application with your bank, the first thing you should do is figure out all the information that you need, put it all together, because it's very difficult to do it in the middle of applying when you're on the application. So the best thing to do, for example, if you're applying and you got to go out and go search for this payroll report, it's going to take you some time. The application may take you out of the application because there was no activity for a little while. So we urge people to collect all the data first. There was, I believe, almost $300 billion. It's 250 billion plus for this round of PPP. There's no way that the government will not make sure everybody gets a PPP loan that they're entitled to. So we believe that the funds will be replenished like it was the first round last time when the funds ran out. And if there's such significant demand that the people have to continue to get this after the program is supposed to close on March 31st, 2021, we believe that will be extended as well. So what I showed you on that flow chart earlier, you need to have a 25% reduction in revenue compared to 2020 compared to 2019 to qualify. You have to have it in at least one quarter or on an annual basis. You could have an increase in revenue for 3 quarters, but as long as you have a decrease in 1 quarter, you will qualify. Okay. Now, if your PPP loan is less than $150,000, the lender may ask for documentation they may ask for documentation for each of the revenue numbers in 19 and 20 to document your reduction. Again, they're asking for this documentation to reduce fraud and make people provide documentation to represent that they meet this test. So for loans that are greater than $150,000, the lenders will ask you to provide the adequate documentation to substantiate the revenue reduction for the quarters, both quarters of each, for the same quarter of the different years. So they'll ask you to show sales information if you're measuring the third quarter, for the third quarter of 19, as well as the third quarter of 20. And I'm going to discuss in a minute the type of documentation that you could use.
Could I ask you a question? What if I am a new business that opens in March, but then I went in, it was locked down?
So if it's a new business, totally a brand new business, a startup in March of 2020, that person started the business after February 15th of 2020, and they would not be eligible. So I guess my question to that person is, did they receive a first draw? Now, if they purchased a company, so there's a difference between starting a business, brand new, versus purchasing a company. If they purchased an existing company that had been in business on February 15th, then they're eligible for either a first or a second, depending upon if that business got a first or a second. Hopefully that answers that question.
Okay.
But gross revenue, gross receipts, what are they? It's revenue, all revenue received, and basically what the SBA is suggesting is that you quantify that revenue on the same basis in which you report your tax return. People on tax returns are they either use the cash basis of accounting or the accrual basis. So whatever basis you use on your taxes is the basis in which you should use for this gross receipts, gross revenue, 25% reduction test. So basically it's revenue less returns and allowances. It does not include any taxes that are collected and remitted to a taxing authority like sales tax, or bulk expenses that basically are a pass-through between you and your customer. For example, a travel agent that is billing you for travel costs plus their commission, or an advertising agency that is billing you for the cost of the media that is buying on behalf. Those large pass-through expenses should be excluded from the revenue number. Okay, so that's pretty much revenue. We also have the definition on our website for some people that want to dig deeper. So what is the acceptable documentation to substantiate this revenue? You can use internal income statements for each of the quarters. Remember, if you're going to use the third quarter, you need to provide, for example, here, an internal income statement. It could be in Excel, or it could be in QuickBooks or any other computer software that you use, but you need to provide that income statement for the third quarter of 2019 and the third quarter of 2020, so that you could show that there's a decrease in revenue of 25%. Now, you could use, as I mentioned, you could use a quarter by quarterly comparison, or you could use an annual comparison if that's easier. Some people, Stephen, don't calculate sales on a monthly or quarterly basis. They look at it on an annual basis, so they could use their annual tax return for 2019, or the IRS is suggesting that they do a pro forma tax return, which is to take their 2020 annual numbers and enter them into the tax return the way it would appear when they file. They do not have to have filed the tax return, but they're suggesting it be done on a pro forma or a draft basis. Alternatively, you could use an income statement like Excel or QuickBooks for the full year and compare that to a prior year's annual tax return. Other documentation that's acceptable would be different types of tax forms. If you use quarterly sales tax returns or monthly sales tax returns, those summarize sales. You could use that information. You could use sales journals that summarize invoices for each month or quarter. Or if you have to, you could use bank statements for all the months in the quarters of the 2 years that you're comparing. However, if you use bank statements, there's a good chance that with respect to credits, which is deposits, deposits could include loans perhaps that you receive. It could include the first draw of your PPP loan. So if that's the case, you want to annotate that or put a marking on the bank statement and say that this item is a loan that you received. It's a loan. If you have a line of credit, it's the proceeds of a drawdown of your loan, etc., to make sure when someone is comparing that calculation that you want to, because if you truly are eligible and have a reduction in revenue, you want to make sure that you're eligible and you get approved. Again, when we talked about summarizing information, I think we recommend that people summarize the credits, the deposits made in each of their bank statements, and include the summary when they upload on top of the bank statements as a cover sheet. And then basically do that calculation, take the difference between 2020 and 2019, and then take that difference, divide it by 2019, and calculate the revenue reduction, and show the the bank, the lender, whoever it is that's reviewing your information, what the number is. And again, don't leave it to, don't leave it to people to make a decision or represent you. Please do it yourself.
Can we have a question, Neil, and they're asking you to suggest the best lenders in the bank in the area to get them to allow the maximum number of things that you can include. This more sounds like a question of why they would use a company such as yourself, because everyone is going by, the lenders aren't determining what gets included, but somebody like yourself could advise somebody that you can include something that they might not know about.
Yeah, that's correct. Our contact information is on the last slide. There's a link to our lender, and as part of our service, if you use our lender, you get VIP service and any questions or help, regarding the program or the application, etc. We're able to assist. But in theory, if you go to if you take the same information and you go to 10 different lenders, you should get the same loan amount from each lender. Okay. We had cases in round one where we saw certain lenders that excluded certain information from the calculation because it was slowing them down. We had lenders, we knew of lenders that would only do loans up to 2 million. They wouldn't do a loan above 2 million, even if somebody was eligible. So different lenders do different things for different reasons. Now, if you were not in business all of 2019, it gets a little tricky on how you compare and how you calculate the reduction in a 25% reduction in revenue. So these are the three alternative scenarios. I'm going to just walk you through how to read this chart on the first scenario. And then we have certain templates that are on our website that you could use for each of the scenarios. So let's say you were not in business the first quarter or the second quarter of 2019, but you were in business the third and the fourth quarter of 2019. Question is, what comparison do you make? So in this particular case, you could take any quarter in 2020 and compare it to either the third or the fourth quarter of 2019. So our recommendation here is that, so here you have a lot of leeway. So basically you can compare the third and the fourth quarter of 20 to the third and the fourth quarter of 19, but you can also compare the first and second quarter. So if you're in a seasonal business, and you're in business, you have activity all year round, but you have less revenue in the first quarter, then you want to compare maybe the first quarter, which would improve your chances of showing a 25% reduction. So we encourage people, if they can't meet the test on an annual basis, perhaps break it down, and you'll see on the next chart, break it down on a quarterly basis, and that might improve their chances of making the quarter. If they get very close, and for some reason they're at 23% and not 25%, they may want to actually look at the detail in their invoicing for those representative months, because it might be that they build, let's say quarter ends March 31st, the first quarter. It might be that they rendered a service in March of 2020, let's say, and they didn't invoice it until April. And because the invoice had an April date, it went into the second quarter sales instead of the first quarter. So if you get close and you don't meet the test, then we suggest you look at the invoices, the larger invoices that are in the beginning, in the first month of the quarter or the last month of the quarter, to see where they belong. So this is an illustration of the different templates we have and the different scenarios. So here you have a case, a business was in business all 4 quarters of 2019. You see the first quarter, they were up 8%, 8.3%. Second quarter, they were down 35.3%. So that meets the test. Okay, so the 550,000 in revenue in the second quarter versus the 850 in the second quarter of 2019 is 35.3% lower. So even though 3 other quarters they're up, because they have 1 quarter, they qualify. Now, if you look at the total annual number, it shows an increase of 4.9%. Okay, so here, if they would have based it, if they didn't do the quarterly comparison, they would miss the opportunity, because here the second quarter is eligible, but on an annual basis, they would not be eligible. So again, all you need is one quarter to qualify. So this entity would qualify. If you were in business the third and fourth quarters of 2019, you can compare each quarter in 2020 to the third or the fourth quarter, like we've done here. Okay, so we're comparing each quarter in 20 to the third and to the fourth quarter of 19. And you could see here, in the second quarter, in each scenario, there was a decrease more than 25%, and the person qualified. Here is a sample. They were only in business the fourth quarter of 19. And in this case, you're going to compare each quarter in 2020 to the fourth quarter of 19. And as long as one quarter in 2020 shows a reduction from the fourth quarter of 19, you're eligible. So the rules are pretty lax, and hopefully everybody is eligible. And then lastly, if they were not in business in 19, but were in business in 2020 before the infamous date of February 15th, what you do is compare the second, third, or fourth quarters of 2020 to the first quarter of 2020. So this is, and the SBA and its guidelines discusses all these scenarios, and we just put it in a template because it's confusing, and we simplified it. And that's these different scenarios.
All right, Neil, if one final thing, I'm looking at this, and your choices are basically to go online with the SBA or go to a bank to do this.
Most banks now have online portals. So you go to Bank X, chances are you're going to apply with them online. Most banks have automated this process. Okay,
so people can do that. Why would they choose to do your services in going through these? What is it that somebody like you can offer?
I'll give you a good reason. I looked at one of the lenders that we work with. I went to their help screen, and it said that our staff or customer service could assist you with questions regarding the application. But for questions regarding the program and eligibility, etc., we refer you to speak to your accountant or your attorney or other outside advisor. We have a team of 16 professionals. Stephen, half are CPAs. We trained everybody for weeks on this program. If they don't know the answer, they bring it up the flagpole to a member of our team that can answer them. If we can't answer, we have resources to go to the SBA directly, or other people we know that maybe have that study this a little more than us potentially. But we provide free service in. We will actually do we for independent contractors we host webinars for independent contractors, and for other C Corps, S Corps, we'll actually do one-on-one sessions, like Zoom sessions with people, looking at their application, looking at their information, answering questions, working with their outside accountant or their controller or bookkeeper. So we will actually get on the phone and invest the time and help people and make sure they use the correct information and give them guidance. So that's so I think what we do is much different than what typical banks do, that are just looking to churn out and assist customers. We'll basically help anybody, large or small, one way or the other.
One final question. Somebody asked that, and they said it was some of their clients, not them. If your credit, if the company's credit or your personal credit has any bearing on the approval of the grant or of the PP loan.
It's not supposed to. It's not supposed to. This loan is There's no personal guarantee. No collateral is required, and there's not supposed to be a credit check, although we have seen our lenders now doing a credit check. And the only reason I think they're doing the credit check is to make sure the person is alive and to protect fraud, to avoid fraud, and make sure they're not giving a loan to a person that's dead or a business that's not alive. So if they have good credit or bad credit, it should have no effect on the ability to get a PPP loan.
Okay. Well, I'd like to thank Neil Seiden for this very helpful conversation. It's a complicated one. Neil did an excellent job, I think, in making it as understandable as something this complex can be. So I'd like to really thank Neil for his help. I'd like to thank everyone who's attended. I'd also like to thank again Northwell Health for sponsoring this event. For those who are unable to watch today or want or know people who were not able to watch, a recording of this conversation can be found on Blank Slate Media's website, theislandnow.com. You can also come on our Facebook page. We have a YouTube channel, and you'll be able to see this recording at your own time. A story, I hope you will also be with us on Thursday, which on a completely different topic. We're going to be discussing COVID, getting into college and flourishing in the age of COVID. I guess everything that is linked today is COVID. So there is a connection between all these things. Again, I want to thank Neil Seiden. His company is Asset Enhancement Solutions. His website is assetenhancement.com. And I recommend that you have any questions or want further information, that you go to the website and get your answers there. Neil, thank you very much again.
My pleasure, Stephen. Have a nice day, everybody.